Okay, hi everybody. Thank you so much for coming. This is SolidBlock and Builtup Ventures event focused on tokenization. Now we're in the real estate space, so we're gonna focus on real estate tokenization, but in general, we would like to increase the understanding of the audience, what it means to issue digital assets, so digital securities on the blockchain, and how this is useful to any industry, and real estate in particular. What are the challenges in this industry, and how we can overcome them. So the guys here today, and the panelists are gonna introduce themselves in a minute, we were trying to create kind of like a model for an ecosystem, starting with the issuance of the tokens, which can be used to fundraise or to leverage assets, and going into the trading of the tokens and the exchanges and so on. So we're trying to kind of create this model of primary and secondary issuance so that we have all of the ecosystem partners, real estate and trading, and just kind of work with us guys to, to help us and help you understand this space a little better. And all together, we're gonna, increase the participation in the space and get this industry going. So that's the idea. So I'm gonna get each panelist to quickly introduce themselves, and we're gonna get started with some questions from me as a moderator. And my name is Yael Tamar. I'm the CMO and partner at SolidBlock. We're here for a PropTech MIPIM event, and so we're speaking to real estate audiences and blockchain audiences in general. So that's me. I'd like to introduce my co-founder Yuval Wurzberger. You want to talk a little bit about yourself and pass it on to Yishai?
Sure. So hi, I'm Yuval Wurzberger from SolidBlock, CEO and founder. And I started the company about 2 years ago with the idea of to be able to democratize real estate and to be able to enable trading and to open up the market for everybody to participate. It's great to see everybody, and looking forward to speaking to all of you.
How are you guys? My name is Yishai Breslauer, a co-host of also this wonderful event by these guys. I'm managing partner of Builtup Ventures, a new PropTech VC. And also I'm a CEO of a company called Sidre, which is a private equity firm for real estate.
Moving to Konstantin.
Yes, good evening everybody. So I'm a partner in Bidbull Capital, which is the first fund of funds in the crypto space, and also we're a trading fund, and also a partner in real estate tokenized fund, and advising several projects, and generally like doing a lot of research in the industry.
Hi, I'm Nisa Amoyles. I'm a managing director at Grasshopper Capital, which is a venture fund that invests in fintech and blockchain. And I'm a securities lawyer. I also host the Digital Asset Report, which talks about all of this. And looking forward to this conversation. Thanks.
Hi, my name is Dmitry Cherun. I'm VP for the Simex Exchange and STO issuance platform. So we are doing a couple of projects on the real estate like funds, but probably it's not about fractional ownership, but rather like tokenized equity.
Good evening, everyone. I'm Frank Volchek. I'm the Global Director of Business Development at MIPIM Capital. And what we're doing is we are digitizing real estate, constructing the tokens as data rather than code. And I'm looking forward to the conversation as well.
Okay, so thank you to all the panelists. So just to kick this off, why does real estate need to be tokenized? Like what is, or any asset for that matter, like what are the primary advantages of tokenization? So maybe start with these two guys.
Sure. As we all know, real estate is an illiquid asset. It's an asset that once you've bought in and invested in a property, your money's tied up for usually a relatively long period of time, 5, 10, even 20 years, and it's very hard to actualize your returns and to use that money elsewhere. So the idea is that tokenization can actually help create a more liquid product, something that by taking a token that's more easily tradable, it's a vehicle for being able to transfer your ownership from without having to actually sell or to transfer the underlying asset. So it's a very beneficial tool for the industry, both in terms of real estate and funds and other investments in general.
So everybody in real estate can relate to that. Everybody needs equity. So when we want to raise equity for the real estate, we have a real estate deal, want to raise equity. So whether you are a institutional, private equity, friends and family, whatever it is, you always need to look from we have a securities lawyer from the security point of view that, for example, if I want to bring investor, for example, from Israel, okay, then I have to understand securities laws from Israel and to bring them in. If I have to, and that's one challenge that I have to face. If I have to bring investors from the US, I have to face the challenge of the SEC and to make sure everything is properly regulated, as well as every other country that I want to bring the capital from. So I have to be really aware of every country I want to deal with to understand that. And I think blockchain, we're going to hear today how this thing is, I think, a major breakthrough. We're going to hear more about it, I guess.
All right, so I'll move straight into next question for all you guys on my left. What are the advantages and disadvantages of tokenization that you can think about, and maybe how you can overcome them?
So only advantages, only. No, on a serious note, so continuing this actually organically, the previous question. So I would say there are certain cases when you raise money and you're talking about like mortgage, like debt versus equity component. It's hard because the valuation from the bank cannot be satisfactory. You imagine you have your property like, penthouse in Manhattan and you think it's worth of $20 million and the bank is risk averse saying, you know what, it's only 17. And like, if you don't agree with me, go to hell. So it's very simple, it's either their way or the highway, right? So then you go to the private capital and it's not easy journey. So this is one way. When you're talking about the fractionalizing this ownership and global investors, there are a lot of great investors, let's say from India, from China, from all over the world, UAE. They're keen on getting to New York property. Like they're actually excited to get here. You don't have to convince them, right? So our job is to create, a kind of framework where it's going to be easier on legal compliance side, on the investment side. And the second thing I would say, one of the biggest benefits because of the global offering is the ticket size. So instead of talking about the private club, our offering was in the hotel industry, and the flagship hotels like Hilton, Marriott, without a few $1 million, they're not even talking with you. There's no franchising. They're just like someone kind of a beggar from the street, With the tokenization, we can talk about high net worth individuals with ticket size ranging from $25K, $100,000. So that's another benefit. We're including a different segment of investors.
Yeah, try and make it very simple. Transparency, liquidity, and automation. Those are the three main benefits of tokenizing and a liquid asset. And this is a very good point. It's opening up global pools of liquidity and the democratization of access to capital and deals. So right now, that's only to other accredited investors, but there are funding portals that cater to crowdfunding laws and the Jobs Act that cater to unaccredited investors. And one can envision a time, hopefully soon, where unaccredited investors can also get access to investing in trophy properties, for instance. And the issuer then, it's a win-win. The issuer gets to raise capital from a different set of investors. It's not just the closed private equity club of people who know about the deal. And so that's what attracted me to invest in this space in particular.
So an exchange, we're speaking about cross-border, so it means it's opening this opportunity for the people who before were unable to invest. And this is just, tokenization is just technology layer, but still it should be like fully compliance. And this is where the difficulty I see. But then through tokenization, people do not need to open, let's say, when they need to trade like equity, they don't need to open brokerage account. They can do this through the tokenized like equity that we have. And this open opportunity for the developing country to actually invest into the US. because what I saw, like I spent like 3 months in South Asia, and generation of the money is quick there, but after that they wanted to put this money to the more stable economy where it's investment protected, and so far like US is one of the best.
I feel, Invenium Capital feels that the benefits of tokenization is to take the data that surrounds these illiquid private assets and make it more high functioning so people can make educated bids on the properties and the real estate assets that they're looking at. There's also a lot of economic benefits that come from tokenization and uplifting that data and relating it to different models, whether it be a credit tenant model, whether it be a sophisticated NAV model. And there's some economic benefits that come to that, to the owners of those assets. So not only can you tokenize the asset itself, but you can tokenize the cap table of the asset. And at Invenium Capital, we're not really dealing with the RegTech and PropTech portion of it. We're more dealing with creating a simple token, and that being the organizing principle for all the data around that asset. And once we can make that more high functioning and we can socialize that data, then you can really create liquidity.
Well, thank you guys for all this. I think we got a pretty good impression of what tokenization is and why we should do this. So now I want to go a little bit into how this market will be created, right? So we say that tokenization is basically an act of turning real estate, which is an illiquid product, into liquid digital security. So it's a new product in the market, and the market is in the process of being created. So my biggest question here is whether demand will create supply or supply will create demand. If there is demand on the institutional or accredited or retail investor side for tokenized real estate, and whether we should generate lots of projects for investors to choose from and educate the market, or whether we should go on the investor side and kind of generate the demand there. So I want to see who wants to start to address this difficult question. Yeah.
Okay, looking for perspective from the real estate point of view, I would say any real estate developer operator that wants to raise capital, doesn't want to understand what STO is, doesn't really care about what STO is. He just wants to make sure that he has the capital in order to have for his deals. So any single thing. So from a guy who understands real estate, and you hear all these experts, the way I get it is like, make it happen for us. That's the way the real estate perspective is. So basically, I think that two major aspects I think are going to be key, and I guess we're going to hear it from you guys. But the first aspect is the technological aspect that makes it simple. That there's a back end which is completely technological, and there's a front end where the user is going to go in and say, okay, first name, last name, boom, I'm putting my capital, whether it's, like you said, instead of putting $20 million, going to be $5, okay? That's a future type of REIT. And the other aspect is whether I'm in America or if I'm in Germany and I just want to invest, the same regulations apply, and the real estate developer who's raising capital or operator raising capital is looking at it and says, you know what, I don't care. As long as I have money and that platform makes it happen, I think that's meaning you don't have to educate the market. I think that there's a will and there's a want from that side of the real estate market. And I think that the challenge would be from the people like you guys that are holding this position of having that platform, how to do it.
I think that what Yishai says is correct. At the same time, I think the question of supply bringing demand, I think that we're seeing right now a paradigm shift in the way that business is done. Today, investments are done a certain way, and it's very closed off. It's very tight, and the idea is to open it up and make it easy, and a good interface and a good seamless interaction between the real estate side or the project owner side and the investor side and having that transparency that you mentioned before, that's going to change the way business is done. So it's not about supply and demand, it's about everybody being ready for this type of change, for this new market to emerge. And I think, yes, supply is going to bring demand. The right projects, the right projects which are open to this new way of doing business. That's what's going to bring this new age, this new type of investor to the playing field.
All right, if you guys want to add something.
Yeah, sure. I mean, I want to make it more fun and interactive. I mean, listen, we're talking about complex subjects, right? And real estate, some other tokenized equities, securities. Those are almost like gibberish words to some people. Retail investors, they don't know how the private equity world or institutional investment works. They don't have to know. They don't have to know how blockchain works, right? I think the problem right now we're having, we're shifting from the engineering and the anarchist world, technologies, to libertarians, and now step by step, it's coming people from marketing, who are able to even communicate what's the value proposition. What are we talking about? I'm not a big believer that everything should be tokenized. It should be reasonable offering, and some things should be tokenized, some are not. It's not, like that we have to tokenize everything. No. First of all, previous question was the cons. It's costly. Anyone who actually practically did it knows that to raise, let's say, even a $20 million offering, it can cost you from $500,000 to $1.5 million in everything, legal, compliance, issuance platforms, marketing, all the budgeting. It's not cheap. Now you have to ask yourself reasonably, does it make sense from a business standpoint? Number one. Number two, are you actually doing the right job to make it to dummy it down, to simplify it for the retail investor, to make it sexy, for God's sakes, to make it so that it's desirable, to make it that reasonable. For example, if you're tokenizing an iconic, we're just talking with some folks, if you tokenize Cats, an iconic restaurant in New York, do you actually have to explain why you're doing that? No, you co-own something that you lived, your generations lived. Your kids, your grandkids went there, they ate this humongous burger, and they understand the taste. You don't have to sell it. This is sellable like that. If we do those case studies, successful offerings that actually are desirable, and there's no way you can become, let's say, an owner of Cats otherwise, I think everything else will come.
So I'm an investor in the Aspen St. Regis deal, which a lot of people talk about, and it is trophy property. And so in that case, it opened up, demand. It was there. A lot of people wanted to be part of it, but you still need market makers in this market. You still need to educate and advertise. Why is this a good deal? And that's missing. I think your point about the expense, it's less expensive than an IPO in some instances, by about 40%. So it's actually much more efficient to do this for certain assets, right? Massive securitized debt, maybe it's a sports team, maybe it's art, for all these other reasons. And I think we've only begin to touch the tip of the iceberg on the amount of good deals. There are a lot of good deals in the pipeline that are going to come to market, and then there's going to be a flood of interest in this space. It's that the infrastructure is still being built, right? Secondary trading is still clunky, and we're still trying to invest in people that are figuring that out. But I think, the advantages, there are some disadvantages, but the advantages far outweigh those, and will over time, and we'll all see this.
I think it's more about the educational part here, what prevent people, continue to what Konstantin brought, and I have a story. So I was in Indonesia, and I was speaking with the people, and I said that we will put tokenized equity, and there was silence. I didn't get it. Maybe there was not a good translation, and then I put S&P 500 graph from the Google, and they said, "Oh, you're not lying. It's always over time growing." So people basically do not know about the equity. So that's the problem with the education. But once I told them that we will put like next month tokenized gold, they were like, wow, because they know this from the background. So this is what prevents people sometimes, even if you put something, you need to make it sexy. So it will be in the simple words, people need to understand the product. And this came from the like demand. We cannot, even if we have like technology, they will not be using this. And probably they will fail trading equities because they are not educated. Yeah.
I agree with the education portion. I feel that it will be demand that creates supply. And I feel that on the other side of that, you have to be able to socialize that supply and make the education, make all the information about whatever you're tokenizing, you have to make that available so people can make a good judgment on what they're buying. Because just because you can fractionalize something and it clears and settles quickly does not create liquidity. What creates liquidity is socialization of all the data that surrounds whatever you're tokenizing in order so people can learn about what that is so they can, and it's education, and you do have to make it sexy, so there's a lot of marketing involved. But I think it's going to be I think it's a fine line, but I do think that demand will create supply. To get back to the original question.
All right. Well, I'm satisfied with that. Maybe we should put that to a vote. All right. Afterwards, during food. All right. So, which assets, real estate or otherwise, should or should not be tokenized? Start with you.
Okay, I think that's a very, very good question. I would say I wouldn't take a segment. I wouldn't take, because if I want to divide it to segments, I would say you have residential, you could have income-producing type of properties. You have residential, you have retail, you have mixed-use hotels. We can go on and on. I would say it very simple. I would say it like in a child way, big and small. Okay, the smaller the assets are, the less I would say it's relevant to start using tokenization, because it's simple to get the equity, it's simple to get any other funding. But the second you get larger and bigger, there the challenges of raising capital come about, and then you want to find solutions. And STO there is this solution, because everything that we spoke about today, the liquidity, the international part. But again, it requires so much marketing and education to get there. Just to add one more aspect to it, I think that the coolest thing would be if STO becomes actually the bread and butter for equity, and then it will take, you'll take it up a notch, and it becomes also debt, and everybody will start using it. It's just like EB5 was so exciting in the market, everybody used it for equity, and all of a sudden everybody said, yay, let's do it for debt. So the same guys who did the bundlers, that did this, did that, and as we call it, the raising capital became so exciting. So STO, I think, is yet, we can't even say how far it will go. I think there's no specific segment. It's only, but the larger the assets are, again, I think that their STO is going to really take over, but that will take time, as everybody said here.
So I think that there's no specific asset class that is suited or better suited or not suited, but I'm not sure if even the price point at some point, the cost of doing of tokenizing something or putting something on the blockchain is going to decrease, and it'll be simple to put your own private, your own home and put up your home and get a home line of equity on the blockchain, and people can actually invest in your private residence. You could do single family, you could do multifamily, but I think that right now, with the costs and with the opportunity to get people involved, that's a door to nowhere.
All right. So are there any assets, real estate or otherwise, that should or should not be tokenized, and why? I know you talked about the sexy type of assets you can eat in.
Yeah, I'm coming back to the Freud argument coming back, adding to my previous panelist that size doesn't matter as well. I agree. On a serious note, we're talking about everything that should be reasonable. If there is a common sense in business, if there is something that you would traditionally sell, and you think there a better way to do that, right? There is a bigger pool of investors. Let's say you open up you strategically in Singapore, in Israel, in any other place in the world, and there is easier and faster way to basically speed up the transactions, lower the ticket size, do other benefits, then do this full speed ahead. But if you're traditionally trying to also look at your portfolio, whatever, your property, and honestly saying, listen, it's a junk, I cannot sell it traditionally, let's tokenize it, let's do an STO, whoa, crypto people are stupid, they invest in everything. Probably not a great idea.
I don't think it's about size necessarily. I think it's about how illiquid the asset is, and again, how many people want to get into it. But there's been all kinds of experimentation. First it was LP interest in funds, which had varying success because you invest in an interest and you don't really know the value of it because some of the underlying portfolio companies may have not been marked to market yet. And so that was a little tricky, but interesting because it disrupts the entire secondaries market, which I think probably eventually will happen because that is so inefficient. You have, let's say you want to get out of a position in a fund for a life event, you have to go find a buyer, and then you have this 30% illiquidity premium on your, you're off the bat taking, that goes away. I mean, this is you can list it on an exchange and trade it immediately in the future, theoretically. Right now it's not working so well, but so that will go away. And I think, art was another use case that people wanted to own a Picasso. They would never be able to spend $5 million on it, but they can share the ownership. It can rotate around museums, and they're still claiming that they've got a stake in it, and it has some emotional value to it. And recently an NBA player tried to tokenize his future contract income stream, which really actually is a win-win for the NBA, but they have this arcane rule that'll probably be overturned. And this will probably be precedent setting and be able to happen much more. So, sports teams, people are also very emotionally invested in players, and think about fantasy sports. It's all these different use cases really open up. People are just talking about real estate because it was one of the first, right? And it's an illiquid asset, but there's all these other great use cases that we'll start to see more of.
I think gamification will be the key because also when we put something that is blockchain, for me, I came from the video gaming space. It just kind of the game that probably put virtual world and connected to the traditional money. And usually in 17, I was more from investor point of view, saying don't invest in this because there is no utility value, because probably it's kind of the game. And then gamification can be the key so that casual user can jump into the game, because right now the game is about the gambling, the same as traditional trading. But if there will be additional use cases for the tokens, it's not just management of the money, because for real estate, what I see, for casual user, they don't understand this, whatever, equity or real estate, but they understand if they put something to the, let's say, tokenized real estate fund, and then there is projection of the income, then probably for them this is a purchase intent to put the money. But they do not want to know this in reality. That's why the easiest way is something that actually investment advisory arm, like real estate tokenized fund, and people will be more willing to jump into the game through the tokens. because they know that, okay, I will have like, let's say 10% return because this is a property with the projected revenue, it's long-term lease, and it's easy for them to sell. But if it's some junk private condo, then you cannot sell this. Yeah.
I agree with what you're saying, and Nisa, I agree with what you're saying. Sports teams, art, anything with an emotional tie, and things that people want to own, and they can brag about that they own. Those are things that will be easy to be tokenized. I think for mass adoption of tokenization, what you were speaking about is getting something where you're looking at the blockchain as a secondary form of data retention and get away from the crypto aspect of the blockchain. And then once you start to get the traditional investment field looking at it that way and seeing the utilization pieces that they can put that in place, then you'll see massive scale. And then you'll see tokenization of a lot more use cases of tokenization, because once we can get the traditional investment community involved, then it's gonna be okay for everybody else to be involved. And then you're going to start to see rules and security laws and all those things start to change.
Quick question. Can that be then, it has to be a physical property or something that is physical, or can it be an idea? Can an idea be tokenized?
Can an idea be tokenized? I'm sure an idea can be tokenized. I haven't really researched that or thought about that too much. Right now, a patent can be.
A startup company.
If idea is recorded in the library of Congress.
Yeah.
Still a panel.
Try the other door.
So I do feel sports, art, real estate's the low-hanging fruit because it is illiquid and there's going to be a lot of demand for it, and there's going to be a lot of cross-border demand for it because of problems in different regions and people want to protect their money. But we're going to have to get the institutions involved in order to get the rules and the regulations around all those different problems changed.
So first of all, I really love it how people are literally knocking on our doors. And opportunities are coming in. Second, I love the kind of difference of opinion here, or more of different perspectives on the same issue, because we have this very diverse panel here. So before I open up, I know that food and drinks are waiting for us. We'll take a few questions from the audience, but before we do that, I want each panelist to take 10, 20 seconds and talk about what they want to happen in the next year for this industry to take off, what you think needs to happen for us to see, hundreds of, or maybe tens of billions of dollars, hundreds of billions of dollars being tokenized every year. So what do you think will need to happen?
So one of the major challenges, to be very short and sweet as we call it, one of the major challenges is that when you want to raise capital for any real estate project, you have either 30, 60, 90 days. Sometimes it gets to 120 days, but you have very limited time. So especially now that tokenization is new and everybody wants to make it happen, and it's how do you say, it's like a baby being born, it's a new child, he's trying to walk. Real estate sponsors, meaning operators, developers, they need the money now. They can't now wait for, is it working? Will I have it? There's no such thing. So I think that one of your challenges would be to to help them, whether they raise the capital in a different way, to tokenize it after it's being raised and after the equity is going to the deal. I think that would be step one, because to try to, the wagon before the horse is not going to work. So, baby steps.
I think one of the things that needs to happen is a lot more collaborations. I think that this is something that we're seeing in this space, which is really good companies, interesting projects working together. Everybody has what to offer, and if we all work together, then the industry will be successful, and we'll be able to firstly push and change the regulation and really enable what we're trying to accomplish.
I love the John Lennon vision.
Following John Lennon, like, you know, adding up. No, I completely agree. I think, like, very practical example, for example, the protocols. A lot of the insurance platforms are trying to, like, you know, market their own protocols. I think there is no reason to do that. I hope, like eventually we're gonna come to one, like, standard protocol that will be accepted with all the, you know, exchanges and across all the issuers. Then the second thing, I really hope that we're gonna see more institutional and grade broker dealers who are gonna join, because they already have their own pools of investors, like, you know, 50, 100,000 people, who in turn they're gonna educate, and that's gonna help. And with the same thought, I hope we're gonna have more financial advisors, your typical CFA, IRA, who's gonna go tap into it, because they already have clients and it's easier, they have connection, you know, they invest in something like, you know, similar, so it's easier to explain it to them. Like, you just need maybe, like, you know, a few weeks of education. So, like, of course, the regulations is also important. I think there's a lot of there's a lot of SEC and FINRA, like, you know, there's another panel, like, you know, Digital Asset Summit today, and they're actually super open-minded. They're doing a lot of sandboxes, you know, with cross-border transactions with UAE. So they're doing a lot of efforts. But we do understand there is a bureaucracy in place, so it's going to take time. So it's first, we're going to do our own job as the market players in the industry.
So on the regulation point, these are security tokens. That means they're securities, and they are already under the 33 and 40 Acts, and so it's fine, like the way it is. It's regulated, right? So I think more you're talking about like crypto regulations, but I think that's the exciting thing about this market, is that we can operate right now under the existing laws. Nothing really needs to change. What we do need, again, right, is more infrastructure, more analysts evaluating the projects like they do stocks, more market makers selling and educating about these projects coming to market, more platforms where people can log on, and you know, maybe the one law that changes is the accredited investor rule, and so unaccredited investors can log on to these platforms and get access. So I'd like to see all of that happen, but I really think that if we see one massive securitized debt or tokenized, and you know, the institutions are already investing in these things. It is already happening. It just hasn't hit the mainstream news yet. So I think once it hits the media, and media does a good job of educating, then I think there'll be a floodgate. I'm looking forward to that.
Yeah, I think one part is also what is missing is the banking, and right now banking are not so crypto friendly, and they don't actually deviate, like whether it's like cryptocurrency or it's investment into the tokenized. For them, sometimes it's the same. That's why I think like I hope to see more like friendly banks in the future who could transact this.
But it's different, completely different. This is not crypto, so everybody knows. Yeah.
I think Konstantin made the point before that the education about what's going on with tokenization has to be made. So tokenization is going to happen. It's coming. It's happening. All the big institutions are doing it. They're working with it. They're researching it. It's making it understandable for all the investors, institutional investors, accredited investors, and retail investors. So they don't even realize what's going on behind it. They don't know if it's tokenized or not. They don't need to understand the ins and outs of tokenization. They just need to know what they're investing in. And so making the knowledge about what they're investing in and making in high quality investments is really what's going to push this forward. But I also do believe that there are a lot of people that are building walled gardens, and I think there needs to be a lot more cooperation. I call it co-opetition, because we're so early right now, and that there's enough room for everybody at the moment, and then we can make those walled gardens as we move down the road.
Okay, so thank you guys for all of these perspectives. Now we're gonna take 2 questions from the audience. Each question is gonna cost $10,000. No, I'm just kidding. All right, so no, they're free. So
I'm interested in the experience up to this date of the secondary market for, let's say, the Aspen St. Regis. Have there been transactions? How did that work? How did it happen, et cetera?
Stuck with the mic. All right. So yeah, to date, I don't believe that the Aspen coin has traded on a secondary. Firstly, it's a relatively stable trophy asset, and it was most of the investors are holding tight, and there's not much reason right now to trade, and the secondary infrastructure doesn't yet exist and isn't yet mature enough for that. But I think that it is coming, and that framework will be there once there's enough products out there, enough projects, and enough supply. Yeah.
Is there a valuation of the token interests in any
yeah, I mean, I know that there was an appraisal done at the time, and yeah, at the time of the raise. Since then, there's a
give her the mic. She knows everything.
Don't violate any securities.
Yeah, exactly. And confidentiality. So there's a 1-year lockup, which literally just happened, right? So yes, there is going to be trading on secondary exchanges. There's no reason any of the holders want to trade it because it's doing so well. There is, but I think, and there's a lot of demand certainly to get into it as well. But there's just, it's going to be worked through, right? It'll be open for trading very soon. There are exchanges. They have low volume right now because there's not that much to trade. There aren't that many token projects out there. There's a few. There's maybe like 11, I think, that are actively trading right now. So, very soon it's coming.
Just hold on tight. All right, second.
So, two of my friends were the guys who actually tokenized Spencer Dinwiddie's contract. I grew up with them in my hometown, and when they were telling me about it, they said it's very similar to a Bowie bond. So I looked up what a Bowie bond is, and it looked a lot like a cash-out refi. So I was curious why this is going to the equity market first and not to debt markets, because it really, he's taking a loan up front, essentially. They may be funding it through equity and then just paying everybody some interest. And that's where I thought the better use for it was when we talked about it, because I actually said, this sounds like, have I ever told you about the cash out refi when they told me what their project was?
Yeah, no, it's a great question, because I think we have to define what can we tokenize in essence. So typically you would tokenize equity, debt, or revenue share dividends, right? So yeah. Debt is a great example. There's already a fund, who's doing full speed, $50 million fund who's trading debt. It's a tokenized debt. It's an amazing use case here. There's it's reasonable. Same with revenue share and dividends, right? If you're unable to do with the fractional ownership to retail investors to share the revenue from this building, from if it's residential building, let's say you wanna involve more users, so I call them users, not investors. So how would you do that? Tokenization in this particular case makes sense. So yeah, there is a lot of case by case studies where you can do that, and it just depends on the economics, and you have to take a look into the financials if it makes sense, because a lot of deals right now, unfortunately, they're actually invested 80 to 90% from the existing investor pool. The question is, what are we going to do as an industry to actually attract new investors, not the existing one?
Amazing.
One more thing on that. It's the token for the NBA player. It's a new asset class. So as an issuer, you can assign whatever rights you want to it. You can assign properties of debt, properties of equity. So I'm not really sure why they chose to go with equity. It might have something to do with engaging the fan base here.
Flavor
fantasy basketball. You know, I mean, yeah, right. But you're right. It's exactly like Bowie bombs. It's just right. So none of this. That's the whole point. Is like none of this is really new. We have always fractionalized, right? But now we're using a blockchain to do it, and that just has so many benefits of automation, transparency, managing your cap table going forward, things you couldn't do in a normal equity issuance environment.
I was also wondering why not a personal loan for him? Like we would do a cash out refi, but it's cheaper to tokenize it, right? That's the logic.
I wasn't a lawyer on the deal, but I assume so.
But I mean,
Yeah,
if
okay.
it was to happen with a cash out refi.
Yeah, I think so. Right? No legal. This is not investment or legal advice. Let's just disclaim everything.
All right, so I think we're good with tokenization, real estate, debt, equity, and if not, then, you know, drinks are great. Yeah, I think you can drink them and they're free tonight, so it's good. So yeah, if you guys have any questions to any of us on the panel, you know, just reach out to me and I'll give you contact information. But thank you so much for coming and listening. You've been great, and all the panelists have been amazing. Thank you for coming. Yes, thank you. Let's give a big round of applause.